Hello traders and welcome to another video review. Today is Friday, the 8th of January 2021, and we are going to take a look at the Forex calendar, and then of course we will do some technical analysis. Today's a very interesting day because the data from United States are kind of important for all of the traders, which means we have NFP Friday, of course. But before we get to the US session, let's just take a look what is going on during the London session. We got some data, but they don't have much impact on the markets. As you can see, we got industrial production from the Germany, trade balance, unemployment rate from Switzerland. Some of this data are better than expected, like industrial production, trade balance from France, consumer spending from France, Halifax price index from the UK, and unemployment rate from the Eurozone. Those data are scheduled for release at 11 o'clock. And then, of course, during the London session, not much is looks like not much is going to happen. But during the New York session, we got the unemployment rate and non-farm payrolls data 2:30 as usual. We got all of this non-farm payrolls data to be released as well, like average hourly earnings and average weekly hours, together with the participation rate. And then, of course, at the same time, we got data from Canada: unemployment rate, employment rate, part-time employment change, and participation rate. At the end of the day, at 5 o'clock p.m., we got the speech from FOMC member Richard Clarida. And then for those of you who are trading the crude oil, we got Baker Hughes US rig count at 7 o'clock p.m. So the event of the day is, of course, non-farm payrolls and unemployment rate data. As you can see, non-farm payrolls are scheduled to be to bring on the 60,000 jobs. The last month was 245, so that's a very, very bad reading. Any number that will beat the expectations of 60,000 will be considered better. Any number that beats 245 will be great for the US dollar. So the US dollar might find a temporary support across the board, right? So please pay attention to this data. Unemployment rate. Unemployment rate should be rising. This is the market forecast, from 6.7% to 6.8%. We will see how about that. Any expectations like this are very often treated as a conservative one, because it's only 0.1% difference between 6.7 and 6.8. So any number close to the 7% will be worse than expected, and will be even worse than expected. So the US dollar will be again in a big trouble. But if the unemployment rate is lower than 6.7 and lower than 6.8, then of course this will be another trigger for the US dollar to rally. So very interesting situation, and this is why, due to the non-farm payrolls Friday, I think we should take a look, of course, at the euro dollar, dollar to Japanese yen, SP 500 and the gold. So here we go. Euro dollar. Our primary scenario is the rising wedge breakout. The rising wedge breakout towards the level of ultimately towards the level of 1.2013. So right now we got this pattern again, right? It was here, visible here with the pin bar. It was visible here. That was the second one. Now we got the third one, kind of a bearish engulfing pattern for the third time. Right now, what do we need? We need a breakout. First, we need a breakout out of the rising wedge. Then we need a breakout below 1.22. Right, and if these levels are broken, then the final target level is 1.2013. So this is the plan for the euro dollar, and it might be triggered by the better than expected data from non-farm payrolls, which means above 245. Euro dollar and USD to Japanese yen. So why this is important? Because it will influence this market as well, not only the euro dollar. As you can see, interesting things is going on here. So let me just zoom out a little bit so we can see even more of this trend. We got the long-term trend line. It's obvious that it's here. Please notice that we broke above this technical resistance. Now it will be, of course, technical support. 102.88, 103.20, 103.70. Now we are testing 104.02, and if the market if the data will deliver, then of course we might have a nice breakout, because people will traders will buy a USD and sell Japanese yen. Then the next target 104.75. This is the target for today, for this pair. But if we have an extension on this pair, we can easily, after the trend line is violated, after 104.75 is violated, we are getting towards the key level here for the downtrend, which is 105.75, 106.13, because any violation of this zone, these two levels, would mean the downtrend is finally over, and we are making some sort of the either deeper correction, or the downtrend has been reversed and now we are starting a new uptrend. So please keep an eye on 104.02. Please keep an eye on this trend line, and of course on 104.75. Those are the key levels for today, and the non-farm payrolls data might trigger, under special circumstances, might trigger the rally on the USD to the Japanese yen. The other one is S&P 500, of course. So we got it under SPX. S&P 500, new all-time high. Again, new all-time high. We are not going down. We are keep going up and up and up. As you can see, the momentum is strong. The momentum is positive. Right now, we hit the level of 70. So the market conditions are now overbought in extreme manner. The recent high was made at 3,812. So this is the level from the yesterday. And as you can see, I think we can even do some channel, because it looks like we are trading in a parallel channel. Might be wrong, but it looks very, very familiar to, there you go. Yes, something like this. If we just mark it on the chart, we got this nice channel. A little bit of a violation here, but look at the close. This was a perfect one within the boundaries of the channel, and now we get a breakout out of the channel. So if the market does this kind of a breakout, then it means it will either rally higher very fast, very dynamically, or it will be capped very, very soon and be back under the channel like in no time. So please pay attention to the next candle on the S&P 500, which means today's candle. And today, very important data, non-farm payrolls. If we go, of course, if we go higher, the next target is obvious, 4,000 points for the S&P 500. But if this rally will be capped, then the red candle can go as low as 3,715, or even below this level. So keep an eye on this. Very, very important level. And of course, spot gold market. As you can see, very nice price behavior inside of this channel. Love it, absolutely love it. There is no doubt about it. We almost hit the level of 1,965, so which is the lower level of this zone. Let me just zoom out for those of you who are watching this for the first time. This is our chart. There you go. As long as we trade inside of the channel, it's obvious that the market will go higher. Of course, the key zone is still between the levels of 1,965, 1,992, basically under this $2,000 level. But please pay attention. After the rally, we got this big candle here, which means that traders are selling gold and buying dollar again, buying dollar on the USD to the Japanese yen. Potential rising wedge pattern on the euro dollar, which means sell euro, buy dollar. SP 500 on a breakout out of the channel, which means okay, we are not buying dollars, but we are buying stocks. But if we get capped, then the market flows, the money flows will be towards the US dollar, and then on the gold we got nice move up, but then we are on the verge of this of the breakout, just at the lower channel line. So if we break lower, the market is out of the channel, a rising channel, which means traders are selling gold, buying dollar again in another market. Three completely not related market, but they have something in common. They are all quoted to the American dollar, and many other markets might behave like this today. So please pay attention to the NFP payrolls data. If they beat the expectations, the US dollar might be on the rise, might be reversing from the long-term downtrend. Well, it's relatively cheap, isn't it? So, very interesting day today. I hope you guys will like it. For me, that's everything for today. Keep an eye on the markets, keep an eye on the levels, and we will see how the market will play these scenarios. I hope I'll see you on Monday morning with a new fresh video analysis. So for now, take care and bye bye.